like I said, I've been around it now for 11 years, so I've seen lots of trends, lots of hype. I was going to say something about like nobody talks about NFTs anymore, but Elaine actually mentioned NFTs, which was wild. Yeah, I think we're definitely past the hype stage. I think when you look back at sort of 2021 kind of time, that was when like it was absolutely booming in DeFi. We're probably, in terms of total value locked in DeFi, we're probably about half of that initial boom. But what's left is a lot more functional, a lot more sensible. I think is increasingly becoming integrated with more traditional finance. That said, I think DeFi only represents less than like 1% of global finance, so there's a huge way to go. But when you look at some of the protocols and the things they're doing out there, so you've got platforms like Aave where you can send your tokens, you can earn interest, you can swap tokens. You've got platforms like Uniswap where you can swap tokens, you can trade coins, and these platforms are making hundreds of billions of dollars a month. So this is serious tech doing some serious business. So I think we kind of passed hype, we're kind of like an early teenager starting to find our way into a more established, mature position.
Thanks. Alex, would you agree with that?
So, a colleague of mine, an American, this is why it's quite a whimsical turn of phrase, uses the phrase toys beget tools. And I think we've kind of, like DeFi summer was pretty crazy, and we're maybe heading to a point, especially with the increasing adoption of RWAs and things like that. Stablecoin's not an RWA, that's my hot take for the day. We're getting to the point where these things are starting to become more usable, and like you say, even with TVL down, the numbers kind of speak for themselves. What's more interesting to me actually is that a lot of these blockchain protocols are starting to be the scale where they're running into real world financial planning problems, like wealth concentration being a really interesting one, where, for example, their initial investors are accumulating a certain amount of liquid supply, and they're running into structural problems in their economy vis-a-vis their stakers or staking percentage, or liquid use of DeFi protocols that require liquid funds. And I guess as somebody who's interested in the academic side as well as the kind of operational side, that's very fascinating, I think, because we obviously have studied traditional economies for a very long time, and we're starting to see these things converge in the kind of theory, and that shows that we're at a reasonably mature stage if like we're able to actually put traditional financial models onto these things and start to analyze them that way. So I think both from a practical operational perspective and what we see users doing and how they're earning yield, but also from like the ability to analyze these things, we're at a much greater degree of sophistication than we were even 2 years ago.
Thanks. And leading on to the next question, not here to knock out NFTs and such, but I think you kind of were starting to touch on it there, Alex, in terms of the answer to the previous question. I guess obviously, the people have associated crypto and blockchain really just with Bitcoin, but there are much wider use cases, and it seems that we're moving on from the hype phase of looking less about the jazzy stuff, but actually really taking seriously the underlying distributed ledger technology that sits behind it, and actually thinking there's a lot of transformative potential to affect a wide range of industries. What particular use cases do you think, particularly financial services, does this hold in terms of the greatest potential, particularly in the long term?
Is that to me?
Go for it, Paul. Yeah.
Oh, cool. Well, Alex touched on one, RWAs, real world assets. I think this is fascinating. I had a friend a couple of years ago who said everything with value will end up on a blockchain. Now because I have been around for a while and I've seen these hypes and trends, and I am a little bit of a skeptic about some of the technology and some of the innovations we see. But you can't deny this is happening. So real world assets are being tokenized. There's platforms like Centrifuge, which holds something like $500 million worth of assets that you can invest in with cryptocurrency tokens. And these are things like bonds, shares, invoices. There's even fractional ownership of property. So this kind of opens it up to smaller markets, people who are maybe less wealthy, who actually want to get into this space, who can own a little bit of something. And it also makes sure the markets are 24/7 as well, because crypto doesn't stop, it's not bound by the time pressures of typical trading platforms. So I think that's a really interesting one, and I'm seeing huge growth with that. It does make me a little bit nervous seeing all these real world assets being represented on blockchains, but it's an interesting time. I think for me the main one, and it's always been the driving function of what I found interesting around Bitcoin in the early days, because like 10 years ago it was just Bitcoin, things were quite simple. It was Bitcoin, darknet markets, and remittance of funds, and you would use Bitcoin to transfer value from one place to another relatively quickly. And when you look at things like stable coins, which is touched on, you can go from traditional finance, and I've got to be careful what I say here because there's like a whole gang of people from Lloyd's who might beat me up afterwards, but you go from traditional finance, which was traditionally can be quite slow, it can take days to transfer funds across borders, it can cost quite a bit of money, to something that takes seconds and pennies. So I think the cross-border remittance use case is really interesting, and with all the troubles in the world lately, we've seen a lot, and we do a lot of research and chain analysis around this. We've seen a lot with regards to funding of charities in war zones, supporting refugee crises, and there's a lot in that space, a lot of good humanitarian use cases as well. And I think another one that I'm reading more and more about, and I'm thinking back to, I think it was one of the earlier panels were talking about the security side of things. I was recently involved in some research with our colleagues in the National Crime Agency regarding the abuse of generative AI to bypass know your customer checks, and I know this will be a huge concern to a lot of you, particularly in the compliance space. And an interesting technology that's sort of bubbling up and actually starting to have real application is around zero knowledge proofs. And this is basically being able to prove a fact without disclosing all your personal identifiable information. So for example, I could say, my name's Paul Taylor, I live in Greater Manchester, and I'm of a certain age, without actually handing over my passport and all the information contained within it. So I think that's a real decentralized identification verification is a real world application. I look forward to seeing progress.
I was going to ask, how many times have you been pitched property on the blockchain at one point or another in the last 10 years? It's like the bingo card, isn't it? Picking up on that, actually, I think the really interesting thing that we're seeing with the convergence of stablecoins is that identity and payments are like fundamentally linked. And there was some discussion, I think, earlier of the scale of remittances going through the Barclays platform. But what's interesting about when you think about an organisation kind of analysing that scale of data is how much a bank knows about you, even if you don't bank with them. And you know, that's just an illustrative thing to show you that, like, as soon as you make a payment, it becomes an identity problem. And the sort of stuff you were discussing around zero knowledge proofs and payments, and ideally payment itself is a zero knowledge proof. That's kind of, to me, the kind of toys to tools. We've got these public blockchains at the moment, and things like zero knowledge proofs provide a really compelling way of starting to decouple some